crypto projects that have operated like fintechs have won, I think, the past 2 or 3 years.
This episode is sponsored by Canton, the only public permissionless blockchain built for institutional finance. We'll hear more from Canton later in the episode. Blockworks Digital Asset Summit is back in New York, March 24th through 26th. We'll have top speakers from leading asset managers, financial institutions, DeFi protocols, crypto companies, and policymakers all under one roof. Think BlackRock, Coinbase, Robinhood, and more. Follow the link in today's show notes to buy tickets and make sure to use code BELL200 for $200 off at checkout. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed.
All right, everyone, welcome back to another episode of Bell Curve. You got me, Myles, Xavier. Good to be back, boys.
Morning.
Good to see you. Just a 3 short week countdown till death. I know I took the words right out of your mouth, Myles. There you go. The obligatory show. Exactly. Well, we'll be there. We're doing a live. I think this will be the first time that the three of us have ever done a live panel or anything like that. So should be fun. It's a really interesting time to be doing this, though, I will say, because the divergence in between, just the amount of raw excitement on the institutional side of the market, the amount of fintechs that are looking at vaults, it's so different from kind of the rock bottom sentiment of the natives. And yeah, I pointed out at last ask, but the diversion continues to get larger and larger and larger. It's it's kind of the most interesting thing happening in crypto at the moment. So we'll see how people are feeling in March.
You mean like the RWA DeFi intersection, basically?
What is happening in crypto at the moment? I would say you can broadly characterize it as an innovation in exchanges. So this combination of the everything app, the everything exchange, and prediction markets, stable coins, and tokenization. RWA looping. I think that's...
Yeah, I agree. Well, that's the growth. Yeah, I think
AI is obviously working, but is crypto AI working?
okay. So we could say crypto has faded into the background of fintech broadly, right? That's good. That's what I would say. Stable coin, cross border is a slam dunk, right? And crypto's trying to fade into the background of, let's call it TradFi, asset management, right? As more assets become tokenized, and that just becomes the default rail for some things. And then, I think the exact same thing is being pushed from the AI side. Is that okay, cool. You have agents that do XYZ. Well, that should be the headline. Oh, okay. In the background, they're using stable coins and crypto rails. But we only have hit escape velocity on that first one, I think, which is the fintech side.
I agree. And given that crypto and fintech are now so intertwined, and increasingly where the leverage is coming from in crypto is changing and it's becoming external to the industry, this is my lead into the topic that we wanted to discuss today, which is the changing archetype of both founders in the space and investors in the space. And people say this often, but what got us here is not going to get us where we want to be. And crypto's been around for about going on 20 years now, which is kind of crazy to say. Crypto, the industry hasn't, but Bitcoin is 18 years old. So yeah, we're getting older in the tooth, and there have been a lot of real visionary founders that took big bets and really had to peer far into the future to understand how this space was going to be and how this technology could be leveraged. And some unbelievable, very brave, frankly, tales of investors who took early chances on them and put up capital when there was very little chance of success. However, it does feel, I think, if you're in this space, we are potentially at a spot where there's going to be a changing of the guard. And I think it feels like that because we've had so many high profile exits, right? We've seen, Kyle Samani publicly announce, his resignation from Multicoin and step down. There are a couple others that aren't necessarily public yet, but there's a lot of GPs and teams that have like founders that have stepped down. I saw Michael Bentley step down from Euler. I don't know if he's leaving crypto, but there's this kind of feeling in the air, right, of things changing, and at the same time, the parts of what is determining winners and losers in crypto is kind of external, and it seems like a different type of both founder and investor are needed from what we've depended on in the past. And this is not, by the way, to belittle the accomplishments, and I'm sure there are people who've been around for a long time and will continue to be successful, but it feels like this is changing, and it's kind of relative to where the industry is. So,
Yeah.
I don't know if you have any commentary there. I'm happy to get into it on the founder side
do.
first.
Yeah, I think like a good analogy is to compare it to a company and the life cycle of a company, where in the early days, let's call it pre-product market fit or pre like hyper growth stage, you have a set of individuals that are really good as like the pioneers, right, for that company finding its place in the world and finding, establishing itself. And very often, the first 10 employees, right, if they were successful, they don't always have the skill set or like they're not always the best people to take the company through, let's say, like, from employee 1 to 100 to be there and lead the company from employee 100 to 1,000 or 10,000.
Right.
Right. And I think we're hitting that with crypto, where like as an industry, a lot of the playbooks and things that made and just skill sets and I guess mindsets that like made the first generations of founders successful are not necessarily they're not necessarily evolving with the space, and are not necessarily the right people to drive like crypto into beyond our like self-referential bubble, right? And break into whether that's, competing with NASDAQ if you're Uniswap, or competing, with the largest fintechs in the world if you're building some like stablecoin fintech business or payments business, right? And so again, like what we talked about just at the beginning of the call, like stable coins have kind of faded into the background of fintech. You have like RWAs, which are trying to fade into the background of TradFi asset management. And we're now going after AI, which is more of like a growth frontier, but you're targeting like very much so non-crypto native people, right? So as a founder, I don't, I think like a lot of the things that have got folks to like some level of success to date are not the sort of things that they need or like will make them successful going forward. So yeah, I'll pause there. That was a very like high level viewpoint, but
Yeah, I have a few brief comments to make. So I tweeted a few weeks ago saying in the age of AI, really execution and technical risk are really minimizing to almost zero. Where back in the day, if I was pitched something, a lot of crypto investing in particular was around the technical capabilities of a certain team or a network and how fast something could go and could it scale. Think Solana and Ethereum. Now these days, I think that anything that I'm pitched, I can assume it will be built. And I can also assume it'll be built in a pretty short amount of time. I mean, again, taking us back to the last podcast, I mentioned that the Ethereum roadmap was pretty much vibe coded. Vitalik came out this week saying, hey, there's maybe some bugs and security vulnerabilities that we should be aware of with something like that. But even still, how fast you can ship now and execute and also build the technical side is much greater than it's ever been before. So like as an investor, I think, again, I'm only speaking for myself here, but what would change the most for me is like thinking really, really hard about a market, because you're seeing now in crypto that these things are being valued similarly to how they get valued in traditional software or even AI. And a lot of it is around business models, moats, cash flows. It's actually about building durable businesses now in crypto. And so I think a lot of teams are going back to the drawing board and thinking about finding a customer, doing like a Blockworks, which they've always done, and, always had great customers and a growing business. And that is a good business. Whereas in crypto, a lot of it, I think, was focused on the token, and the customer was the person buying the token. The customer was not the person using the network. Like that's a completely separate user persona. And so I think now what's changed is that there is no customer buying a token that generates no revenues and a business that's going under. So in my eyes, the space has changed a lot in the last, 12 months even. And I think this is the change that will be in crypto forever. And so now teams are much, much more focused on the business side, finding the right market, asking themselves the right questions around why someone would use this and pay for this in the first place. And I think that the best investors going forward will have the best sense of problems, I think, actually in crypto, and just like really fundamental. And it's got nothing to do with how good the tech is or how much a token might pop with people buying it.
Yeah, I mean, I'm curious. Maybe this is a heretical opinion, but I was on Unchained this week with Tushar and Lorshin talking about Solana, and we're talking a lot about the technical roadmap. Again, this is not to say that it's not impressive, and we do need to work on the tech and all of that stuff. But I don't actually get the sense that that's the needle mover on a 12 to 18-month time horizon here. I think the tech is probably good enough, and it's almost entirely a BD. Like, even prop AMMs are a super interesting example of the tech didn't markedly change. We just found a different way of using it. And I think that that's the whole, as an analog for a particular moment in time. Most of the internet entrepreneurs that you think of weren't the big names before the .com bubble. Almost every internet entrepreneur that you think of started post .com bubble. And I think the reason for that is different archetypes. You had to be kind of a weirdo and super visionary to understand the possibility of the internet pre that massive blow up, because nothing worked, right? You had to ignore all of these very rational instincts of like, hey, it takes 10 minutes to load a photograph. Like no one but nerds are going to use this thing. You had to be very visionary and take a big risk. But then the founders that succeeded after that were the ones who, leveraged that, this term dark fiber, like 98% of fiber was, unused at that time, and say, hey, actually now there is bandwidth to load pictures very fast for my Harvard, my Harvard girl rating app or whatever it was in the beginning, and make Facebook. So I think that that's kind of the moment that we're at in crypto. And honestly, Xavier, and not to be again the boomer on AI, like I'm sure AI has something to do with this too, but I think we're just at the phase where crypto is scaling up, right? You needed a bunch of people to believe in something that didn't necessarily exist yet, and getting something out the door which met the low-hanging fruit needs was enough, and it was interesting, and it brought capital and people. But now you've gone for the skill set needed is not to visualize that world, because everyone sees that world. Larry Fink is on Fox talking about tokenizing all of their index funds. You don't need a visionary anymore. Larry Fink is saying it. So what do you need? You need someone who can scale it.
Yeah. There's like just to hit like the I don't know when the page turned. There was like a period where you were trying to build a cult, basically, and a cult of believers, and now you're basically trying to all you care about is just distribution and users. Meaning, like in the very early days, like it was actually really powerful to be a founder that could strike an ideological chord with people, and I think that's how like Ethereum found success and found developers early on. That's how obviously Bitcoin started everything off. And then there was a period of like, academics and like, just like, I don't know, folks that could manufacture speculation, right? There was a period of, hey, this is the future. This is what you have to believe. We all nerded out on like, crypto architecture and semantics debates for like 3 years, but like it was all about who had the best story of the future, right? And now it's all about external validation outside of crypto. And so I think like fintech has been the first to just validate basically stable coins, right? And the crypto projects that have been dead focused on, or the crypto projects that have operated like fintechs have won, I think, the past 2 or 3 years, right? Bridge being like the poster child for this.
Yeah.
And Zach, if you look, Zach Abrams, the founder of Bridge, like has, kind of like the archetype of a fintech veteran profile. Like he came from like Brex, Coinbase, a bunch of different things where he learned like the traditional playbooks and just, applied that to cross border and then solved the really nitty gritty like pain points, which was on and off ramping, and crushed it. And now I think, it's all about how do you like get folks from outside of this industry to validate like what you're doing and actually start using that. And for like the RWA and DeFi side, that's about going and getting like non-crypto native capital, lined up to be buying a product, whether that's like an RWA vault that does something like looping. And then on the AI side, I think it's all about like, can you get folks that have, traditionally been almost like looked down on crypto, like from the like Silicon Valley AI crowd, to be like, yeah, actually this is super useful. This is where I see like this agentic economy going. And that, I think, to your point, Mippo, like has not totally happened yet. And it does feel like we're just kind of doing the, research circle jerk a little bit. But yeah, I think that's the whole game today, is external validation.
Before we get back into the episode, here's a quick word from our sponsor, Canton, the only public permissionless blockchain built for institutional finance.
TradFi wasn't built for 24/7 markets. DeFi wasn't built for regulated institutions. But Canton is where the power of finance meets the promise of blockchain. The only public blockchain with institutional-grade privacy, true composability, real assets, real markets. Why reinvent finance when Canton makes it work the way it should? Canton, where finance flows.
Okay, let's talk about different founder archetypes here, because I want to make this real for people. And I in doing some research, there is a so YC has a there's a guy there named Jared Heyman, who has broken down popular archetypes of founders into 5 different personality types. So one is the charismatic hustler. So kind of sales driven, can sell snow to the Eskimos, can convince, people to invest, employees to join.
Jason Yanowitz.
Exactly. And the best that there is in best in breed there. 2, technical experts. So deep product knowledge, kind of like the classic kind of gigabrain, as it were, in crypto. Industry insiders, so domain experts. So this might be, what might be a good example of this is sort of I know this product didn't necessarily work out, but like Antonio from DYDX, who was at Coinbase, understood the makings of an exchange, and then went to start his. A lot of kind of Coinbase mafia people fit this personality type and persona, and they saw a problem up close. They had a different take, and they had the industry cachet and knowledge to go out and make it a thing. So I think that
VCs love that one, by the way. They see like the idea, and then they see the pedigree behind the founders, and they're like, oh, I don't have to do any sort of like logic leap to think that that's going to be successful.
yeah.
Sometimes right, sometimes not.
Sometimes right, sometimes not. I mean, I can see why they think that it's the safest bet, right? I mean, it's kind of, you've got chutzpah, the problem already. I kind of feel that. Okay, intellectual giants. So highly academic, right? I mean, you can clearly point to all of these people in the AI space today, the Dario Amadeus, but also, the Srirams, right, from Eigenlayer. Many of the folks that are building in the MEV space. Frankly, a lot of the Vitalik is like this. He's kind of a deep intellectual thinker and kind of an inventor. And then the last archetype being the serial entrepreneurs. And to be honest, you don't really like, who I kind of think of here is almost like a Frank Slootman type. Just give me you get him in there and he'll, or like a Travis Kalanick maybe is a better. Frank Slootman's more like a professional CEO, like a Travis Kalanick type character. And maybe crypto's a little bit too young for that. We don't really have anyone that's tried multiple ventures. Everyone's kind of still on their first. If they're still doing it and haven't played. Leshner is a great example. Yeah, great example. So anyway, those are the archetypes, and I thought it might be fun to knit onto. There's there are kind of these behavioral and psychological archetypes as well that you can kind of knit. There's a sales hustler, like the hustler is a famous psychological archetype, which is I mean directly knits onto the charismatic hustler. There's the visionary, so driven by a long-term goal, charismatic. I think that's kind of the technical expert or intellectual giant. The accidental founder. There's actually a lot of people like this. There's like the Morris Changs of the world. And then the operator, so someone who kind of scales and innovates. And I guess to just cut right to the chase, and my take here is I think this industry was very, very heavy on tinkerer, visionary founders. Like you had to be peering so far into the future and take such risk. And I think we take it for granted today. I mean, even the idea of moving money on chain or locking something up into a DeFi product or doing yield farm. I mean, this was Wild West stuff not that long ago, 6 years ago, 5 years ago. And I think that these are kind of the maybe the Kane Warwicks, right? The Runes, the Haydens, the like very early mover, real visionary. You really had to believe, and I think that the industry has a lot of those people, and I think that they'll continue to be very successful. I'm very supportive of every one of those people. I think the question is, where do we need visionary founders and where do we need, I think there's been a missing category of founder. Like when you think of most crypto founders, they mostly fall into the brainiac intellect, gigabrain researcher contributor, or the visionary who's kind of talking about some new mechanism stuff. You don't know many crypto founders who are really great, like operator, scaler, innovators. You don't know, like most of the founders that they're kind of a little off color. They've got some edge, a little bit of a countercultural spice, but there's not a ton of them that scream immediately like, I could lead an army into war. We don't have many like Douglas MacArthur's. I think that's what I would posit is the missing archetype in the space.
Yeah, I think you're right, but they're coming. Yeah, Xavier, go for it if you have an immediate thought.
Yeah, I wanted to maybe classify the missing founder who I'm always looking for is a product-led founder, which I don't think was in any of those archetypes. And I think I was going to mention before, what's happening in crypto is we're moving from infra to apps. And so most of the builders in crypto are infra-minded and they're very good at building it, but they're not very good at understanding the user, what they need, like prioritizing features to accommodate those users. And we've needed a shift in that kind of founder in crypto, which I think we're still going through right now. Very few builders can do both. In fact, I've seen many come and fail. And also, not only are we going from infra to apps, which obviously we need to find the users, we're also going from users to agents. So now there's a mix again of like, okay, now we need product-led founders who also have some technical ability and understand that agents are coming. And what does that mean? And that's why I think right now in crypto, it's very exciting because there's a lot of opportunity, but it's also very uncertain of like, what kind of product to build, who's using it, how technical do you need to be? And I want to go back to that classification of founders, Mike, of the serial entrepreneur, etc. So like, I feel like during my time as an investor over the years, I've worked with every kind of, archetype of founder. So for me, the shift I'm seeing really across the board is that the intellectual, like Vitalik, for example, that kind of founder, the visionary, the like philosophical founder, like Myles was saying before, I think these people are becoming a lot less in crypto as like the kind of founder who's going to really make it and be successful. I'd also argue the tech guru, again, Mike, you mustn't like me saying it, but the tech guru I think is like, going away in real time right now as like, I can be a tech guru and just use Claude for a day or two and play around with that, probably build something, which is like not meaning to offend, but I think every engineer would agree with me here in terms of like how good the tech is getting and it's making everyone a tech guru. So that's commoditizing basically. The things that aren't commoditizing are obviously being a serial entrepreneur. My investment partner, Brian, who I'm working with at Fractus, I think he's someone who I see as someone that is very ideas driven, but really deeply thinking. And not just deeply thinking about the tech, but deeply thinking about markets and very like high level macro thinkers. I think these people in crypto will continue doing very, very well, who will continue making interesting businesses, even outside of crypto potentially. I can see a lot of people in crypto who have been successful actually moving out into AI and quantum. I tweeted about this a few weeks ago that I think crypto founders are built different and they understand volatility and pain better than any other founder out there. And so I wouldn't be surprised to see some serial entrepreneurs move outside of crypto, which is hugely exciting to see. And then the two that I look at the most as an investor right now, which I've always loved, are the domain expert and the hustler. So to start with the hustler, I feel like there's a bit of hustler in me potentially as well. So I'm a bit partial to any kind of like person who goes out there and hustles and makes it happen. Because I think right now in crypto in a bear market, you need to make it happen. Like if you can't be sitting on your hands and thinking it's going to come to you because it's not. You need to prove your grit. Even if it's not working, you need to prove that you can still make it, still keep confident, optimistic, try and find a way. And the best founders always find a way. And a lot of the startups almost die. So having a hustler and, one person we backed recently is really this archetype, and really one of the reasons why I think we backed him in the first place is just because like he's super smart, switched on, and he's just going to make it happen. And you feel it whenever everyone says to me, this guy has just got this, charismatic way of speaking to me around like his passion and excitement and curiosity. And like, these are all things I think that you need as a founder. And the second archetype I've always been also really, really fond of is the domain expert. But I really want to make a point here around the domain expert of something that I've fallen into the trap of like, I think a domain expert can be a domain expert on the supply and the demand side. And I think in crypto, a lot of domain experts are on the supply side. So I'm talking like, let's say you worked at some infra protocol, you found a problem in the infra, you go out and build the infra, you're domain expert of that infra, and you go out and build it over here. Then you realize that only you cared about that problem in your little silo in that company, and you've just raised 50 million VC bucks, and that's going nowhere. Whereas like a demand side domain expert is like really what you want. And I'm seeing this again on a high level more and more. I'm getting more and more excited about founders that are like kind of in companies trying to now sell for the first time in crypto, finding the customer, then realizing like, well, actually the infra or the product they built isn't actually for the customer. Would you have guessed that from the start? Like, of course, that was the way that crypto used to be. Whereas now it's moving towards a world of like, you need to build infra and a product that people will pay for. A lot of people are leaving these companies now being like, all right, the customer wants this. We couldn't deliver this. And so here's my insight into the demand side around like, here's how we're going to serve it. Here's how we're going to scale it. Here's how we're going to build defensibility around it. So again, I want to like just stress and emphasize the concluding point that domain experts and hustlers for me are really the archetype of founder right now in crypto that is exploding. A lot of these are product-led founders as well, which we haven't had in the past. And so I think it's a really interesting time to be looking at these kinds of archetypes as opposed to some of the other ones that used to be in crypto that might be leading or doing different things or scaling back.
Yeah. And within crypto, I think that probably ties most heavily to those that have been successful building companies without a token up until today.
For sure.
Because there was no easy way out, right? Which was like selling a grandiose vision of the future that you could speculate on that vision with the token, right? If that token goes up, that's actually what they're optimizing for, rather than, creating an ultra tight feedback loop with users of the product and being able to improve the product such that it can then break out of this little self-referential bubble of users to the outside world. And yeah, I know, Mike, you're one of those people. So
No, I'm not. No, I'm not. I'm just saying you need to do both. I love that we've overcorrected, but I just want to, just like many things in life, right? I'm just going to remind everyone that Elon Musk is talking about GPUs in space at the moment. You have to set up vision, right? Like everyone, even at the highest level of the game, does it. I know that it's like you're rubbing salt in the wound because that's all we've done for the last couple of years. I just want to encourage everyone to not overcorrect all the way to the other side and say like, we don't need to talk about this at all or sell any vision. We just need to build. You need to do both. Have to do both. Because if you don't tell people what you're building and get people excited, people don't want to back you. Even in this world of global markets and everything being efficient, there's still something about the human quality of looking at another human and being like, I think you can do it. There is charisma, and that still means a lot, I think. So I think you just have to do both.
right. You can't just like only sell that long-term vision while ignoring like where market pull exists in the next 6 months to a year and who's going to actually pay for this shit. Or like,
I agree.
Okay.
So
Right.
as a hypothetical for you guys, let's say you don't know anything, ceteris paribus, right? Everything else being equal, you've got one batch. You can only pick, one batch of founder here. One, who's got early in this like AI kind of wave, right? And they've maybe got this idea in crypto. Two, but they've got this background in AI. Two, they come from finance, from fintech, and they've got an idea in crypto. Or three, a repeat crypto founder who has another crypto idea. everything else is the same. No difference in charisma. No, like nothing there. Who are you backing in this instance? What do you think is the most highest chance of success here?
I'm gonna head up. For me, it's clear. I think which direction I'm pointing in.
Me too,
You
obviously.
back the AI founder with the AI insight, because again, like I know we've spoken about it on the podcast a lot, but I think genuinely right now in crypto, the biggest opportunity is to build like infrastructure for agents on chain, because it's very clear to me that they're coming in, and they're coming sooner than anyone thinks. So I think if you have an insight into like what this looks like, who's using the agents, what is or is not commoditizing, what rails they need, why they use you over other competitors, like and a lot of these people don't have previous experience serving agents. So it's a brand new ballpark as well, which I think means that anyone can kind of come in. So like, I like the financial person from BlackRock coming in, being like, here's an idea in real world assets. I also don't mind the crypto entrepreneur who's already created something else and has a new idea. But I take myself back to the point where like a lot of crypto entrepreneurs I know from back in the day are infra people, and they're not really product people. And it's really, really hard. Like, I want to stress this point. It's so hard to move from infra engineering to product engineering, or like being a product manager. I haven't actually, I'm not even sure if I've seen anyone do it. And if you look at this cycle, what won this cycle, which we're now in a new cycle, was maybe last cycle, what actually won? Well, like Polymarket, Athena, Hyperliquid, we've talked about this. Why do they win? Well, they're product-led founders. They're not really infrastructure founders. And so I think like we barely saw any new infra founders. Maybe Keone at Monad popped up. But even then, it's like we saw it's very difficult now to like build that narrative. Like you really already need to be product-led. And I think if you're product-led now, and this is a call that I'll make, but like if you're a product-led founder now and you are not thinking about AI, you will fail in the next 6 to 12 months, in my opinion. Like you need to be thinking about AI, how it's disrupting the space, and building a product towards that future. And this is why there's massive disruption happening right now in crypto. Not only is it really, really hard to build products and barely any humans and users are there, we are now building already for the future of agents, talking about the vision, Mike. Well, that is a vision. And so like I get like very red flags start popping up for me when I speak with someone and they're like, AI isn't going to impact us. Like, we'll be okay. And like, here's the DeFi product. And it's like, well, actually, I don't know if that's the case. And I think it will disrupt you. Someone to build a better product that you have, serve that market better with AI, which is what everyone's used to using now. So that's like some 2 cents on those different archetypes. Myles, curious at you.
Yeah, I mean, like if you're saying that this hypothetical founder comes into crypto with a strong network in like crypto AI, credibility in non-crypto AI, that's like not even close. I mean, the amount of dollars and companies being started today that person is going to be able to get in the room with, and the growth prospects around that, like, are much larger than I think, the RWA TradFi space is, because I also have come from a large TradFi company, and lots of people in our industry have as well. Going back to, your friends at that company and being like, hey, I've built this thing that I, would have loved to have if I was in my seat at Fidelity. Like, it's like, all right, cool. We'll run you through the normal gamut and like all this. It's not easy. Versus with AI, there's startups looking to move fast and differentiate, right? It's much more, it's a better fit for a bottoms up go to market, which you're likely going to have in crypto regardless, right? And then the repeat crypto founder is the interesting one. It's like, okay, but what kind of like repeat crypto founder is this? I don't know. There's just like shit that doesn't matter anymore, and just like a kind of a one-off point in time, like good, nice to have skill set. Remember, we're like, oh, community is your moat, right? Anything can be forked in crypto, so community is the moat. Like, none of that shit matters anymore. You're looking for growth outside of like the 10 to 100,000 daily users of on-chain applications, and if that person has demonstrated an ability to like break beyond that, then hell yeah. That's probably the second best person in that crowd. But yeah, I think it's just like, how much does your previous experience, like how much do you come like as a bundled deal of like distribution and network, already there, right? And you've actually like stumbled upon something. So I don't know, Mike, yeah, argue with us, because I probably.
I mean, the only observation that I'm going to make here is like, this would have been highly unlikely. 2 years ago, they would never have said us, right? It would never have said. And I am such a believer in this, right? I use this every single day. I totally get it. I am I can at least, like, just because it's so out of consensus, let me just visualize a world where, and actually, like, real. So here's like an observation that I would make for you guys on the AI side of things, which is supposed to be killing SaaS. Every conversation that we have about integrating agents in our business leads to us spending more money on SaaS. Like, real examples, right? So, hey, instead of hiring a BDR, I'm going to spin an agent up. Well, the agent needs perfect context on all of your notes, and it needs to have a great history of, oh, so we're going to upgrade our HubSpot and our granola. And I'm just like, I could give you that, over almost every vertical of our business. Linear is a great example of, like, every engineer and product person in the world would know that tool. And they're shipping an agent in there. And it's kind of like, yeah, I could like jerry rig all this shit together, or I could just put my linear agent is going to handle a bunch of PRs and stuff for me. I simultaneously believe in the power of AI. I also, I have, just to paint the counter example here, is I could see it being a compliment more than people think. And I could also see, I think that we are in a little bit of we're in the exciting part of the cycle here, right? Like, no matter what, right? Like, even if it is unbelievable, we're clearly in the exciting part. And I think if we were having this conversation in 2021 for crypto, we would have sworn the opposite too. And now we're saying that's, if we had to rank, I think we all would have ranked crypto at the bottom. And I'm not 100% sure I'm ready to do that yet.
Well, I can tell you from my seat, it was like, I remember in the beginning of when I just joined Delta, which is coming up on 2 years ago, like a new L1, we know we need, like, to get apps basically built on Delta, or get them to convince them to come over. We've always viewed ourselves as incremental, technology, following like the broader arc of technology, where like we thought crypto is kind of building in its own bubble over here, and we need infrastructure that you don't need to like lift and shift everything over to this bubble, right? You can just tack it on to your existing backend. So we've had lots of debates internally in the company around who should we be hiring? Should we be hiring crypto native people that have a strong network within Web3? And this was, again, like going back to 2 years ago. Or should we be hiring like outside of crypto? And we never really landed on a strong answer, but the people that like did understand all the dynamics and understood and did have a strong network in Web3, where likely we can source our first, ecosystem projects, but also had like a like-minded, I don't know, like a mindset of us of like crypto is not going to go anywhere unless we can break out of this bubble and reach out, outside to the rest of the world. Like, those were the people that we wanted to hire. And those were, those are also like the sort of, ecosystem projects that we wanted to be our first adopters. And like, that was a very small niche, right? You're either like fully crypto native and like had that skill set and wanted to build there, or you were fully not, right? So I can just say it's like, it's not as simple as it sounds, actually, because I think my answer probably discounted how much value I put on somebody like has shared experience with us over the past 5 years.
Everyone in crypto loves to talk about transparency, but would any serious business publish its payroll for the world to see or hand competitors its contracts? That's not a feature. That's a bug. And it's why most financial institutions can't operate on today's public rails. Canton Network is different. It's the only public permissionless layer 1 blockchain built with privacy at its core, sharing data only on a need-to-know basis. That's why Goldman Sachs, NASDAQ, and Broadridge are already building on the network. Only Canton delivers the network effects of a public chain with the privacy and control real finance demands. Learn more about Canton by following the link in today's show notes.
This has been the longest question of Blockworks. Do you need to be crypto native? And like, look, in some functions, absolutely not. Actually, I think good sellers generalize across. You don't need crypto nativity in sellers. Sales managers, actually, I'd have a different answer for you. Product, absolutely. So it depends. And
yeah, engineers, like, actually, no, like I've found not having crypto native experience is like great because they don't come with any like false priors. They just approach everything from first principles. And like that's been wonderful for us. But yeah, I go back and forth on the product and BD side.
It's just like I'm just gonna observe that it's this very struggling to come up with a more politically correct word than kind of a cucked attitude for people that work in this industry, that everyone's weighting our collective experience so poorly, right? I mean, we think we're going to get TradFi's going to come eat our lunch. The AI people are going to come eat our lunch. I think this is reflective, if I were being honest, of an actual talent issue in crypto, where, yeah, I think that the average quality of a crypto startup, especially a token-based one, is lower than you'd see in other industries because the incentives have been so bad. And we haven't talked about the investor side of things yet, but I think that's a very real observation. But I guess what I would say to you is if we think finance and crypto are coming together, and crypto, I believe, are better financial rails, you very rarely see two technologies or industries collide and the older, worse version ends up being the dominant player or culture, right? You almost never see that. So I'm open to the idea that
That's a good segue into the venture side. And sorry, Xavier, if you want to like if you have a point to that, go for it.
Yeah, maybe just briefly. I guess more speaking from experience here, Mike. Blockworks and I think my previous company, Chorus One, probably went through a similar period of the business life of you were selling into crypto natives once upon a time, and then now you're selling into institutions. And I think from my time at Chorus One, it was a very, very crypto native company started by crypto native founders. And so the company was probably one of the most crypto native teams almost out there for a very long time, very heavy on the research side, looking at MEV, looking at networks, the differences between them. Like at some point, as that market sort of was capped, it was clear that things would move more institutional. And then you had some other peers pop up, which kind of just started hiring suits. And then, for Chorus One's DNA, it wasn't really a suited up company to some extent. It was kind of like, okay, here's what we're passionate about. But like now institutions are coming. Do we understand that market? Do we have salespeople who really understand people who want to buy this stuff? And so I think, like you were saying, Mike, I totally agree. Like not everyone has to be crypto native. I do think on the strategy side, for example, you and Yano, Mike, and your product manager, like you said, and your researchers, by the way, which are some of the best in the space right now. On the strategy side, you need to be crypto native still. And I think you will have to continue to be because you need to understand the tech, how it works, as well as the markets, who's coming now, who's coming later, etc. And I don't think TradFi or AI people like alone have this understanding. On the sales side, I think you need to have the trust of especially if you're selling into institutions. And I think I haven't seen many teams. I think Blockworks again here is a good example though of a team that has like a bit of a mixture of both of crypto nativity as well as institutional salespeople and like really trying to balance both markets. But it has been a massive change. I don't think many teams have done this extremely well, but I do think there is still some merit to being crypto native, but it's now, I actually think one of the best things about being crypto native is really at the startup level. If you need your first few customers, I think crypto teams are much more risk seeking. So they're going to be more likely to try your product and pay for it in the early days for that very early traction you need to maybe go from pre-seed to seed, as opposed to going out to some Web2 company that's completely risk off, hates crypto, blah, blah. And if you have a crypto native person selling into that, I think you can get a leg up, but then you need that next step. And that's when you hire that sales team, like what you were saying, Mike.
Yeah. That is super interesting because Chorus One has always been way more crypto native. That's why Bitwise is probably such a great marriage now, right? Because Figment and Bison Trails, those guys were much more buttoned up and institutional. I was gonna say that this transitions well to the VC side of the conversation because I think let's call it 2021. We had a lot of entrants from Web 2, Silicon Valley, and they would go to crypto native VCs and be like, all right, show me the ropes, right? What I need you guys to help me navigate this crazy Wild West space. Tell me what the playbooks are. I have to set up a Discord to manage the community. There's an airdrop, there's tokenomics, right? And governance and all that crap. And the VCs were don't worry, we've been here for a couple of years. We see what's working and what's not working. We'll help you get up to speed, right? And now I think it's the opposite. I think folks, it's all the things that were valuable to go after this crypto native user base, we realize that's not actually super attractive. It's saturated, especially for any of the sort of let's call it trading or perps or prediction markets. okay, you want to go after that. You can get a small slice of like the pie. But now I think as a fact, like, at least from my seat, and I think a lot of folks are now looking at like who has been historically like the best fintech VCs, that have dabbled in crypto, but like also just carry massive credibility and networks with all of your target, customers that are outside of crypto. Who's going to get you in the room, with the SoFis of the world, those sort of companies, right? And it's about like extending your network and just like you're almost selling part of your company for credibility and warm intros. And I think that's probably the biggest value add that I see from like if you're not coming in with an established network outside of crypto, you're probably looking to buy that network from your VCs.
Well, you know what? I would just say Blockworks is really lucky to have, some really excellent investors. And so I think there are really, really good investors in this space. So I'll call out, the team that led our first round, previously 10T, currently 50T. And, they had this thesis about growth equity. And I think they were really, there's another element outside of this kind of the skill set and value add. And there was all this stuff that the early VCs helped you with. But also the most attractive part of the of the most attractive stage to invest in was the really early stage stuff. And partially there's a very logical reason for that because there aren't many businesses, there are only early stage businesses. The more cynical reason is we don't care about the long-term value creation. These tokens are going to go live before there's even a product. In most cases, we're just going to flip these things. And so you actually have seen this bulging and this like oversupply of capital at the very early stage. And then a lot of those early funds did really well and they got bigger. So now there's this dual dynamic of, well, even if you wanted to do your previous style of investing, just buying tokens at the early stage, it's not going to work because you have too much money. So there are firms like, part of their inspiration for this episode was Paradigm. They did this back in 2023. They said we're going to be an AI and crypto fund, and now they're doing it again, and it's in the Wall Street Journal. But if you're Dragonfly or Paradigm, you can't really be a super early stage investor anymore. The fund math just doesn't work out or make sense. So based on how much you've raised, you need to adopt a new strategy, maybe one that's later in the life cycle of capital raising for crypto. So I think that's also part of the dynamic now that investors are almost a victim of their success in some cases. It's like, ooh, we made kind of too much money here, and now we're drifting into this other part, and the skill set and the edge required of being a Series B or C investor is very different from seed. Very different, especially in crypto.
Yeah, I think well put, Mike. Maybe just 2 cents here. We are really focused at the pre-seed stage right now. And what I'm noticing, I saw Frank recently, FinTech Frank, put out a really interesting statistic, which I actually reposted around the number of pre-seed deals closed in Q1. Of course, this is just announced, and it was 5. And I think maybe like a year and a half, 2 years ago, it was like, I don't know, 150 to 200 plus or something like that. So it really shows you at pre-seed right now, there are very, very few players out there still investing. We are, of course, actively investing in pre-seed founders at Fractus at the moment, but it feels to me every pre-seed founder I speak to, really there's just like not much appetite. And also what's happening, Mike, like you were saying, is like these funds have a lot of money and they're not really wanting to take risk at pre-seed, which makes sense because they have a lot more money they can put to work. So pre-seed's a bit too early for them. But what that means is at seed stage, they're requiring a lot more traction. And so like across the board, pre-seed founders now being really pushed to show market validation of the product, etc. So it's actually very, very healthy for the space. But what it means is that like at pre-seed, there are fewer and fewer investors, and there's some blurred lines around like exactly what founders need to even raise that first pre-seed round. And the gap from pre-seed to seed to get to those larger VCs is massive because they're requiring a lot of traction right now because they're like, the space is changing. We don't exactly know where we're going to put the money. If we're going to put the money in crypto, well, then they better bloody show us, that they're actually growing and progressing and they have traction. And this PNF is a key word here. Like seed investors like Dragonfly, etc. They need to see teams of PNF now. They're not going to like take a punt at seed stage. Separately, what's been happening at pre-seed, again, like just based on the data and giving some insight and commentary, a lot of first-time funds, maybe that raised in 21, 22, etc., it's obviously been a hard time in crypto for a long time, for many years, and the cycle's been super tough. And I suspect that many of these funds have deployed a lot of the capital and don't have much capital left. And so there's just so little capital at pre-seed stage now. It's actually kind of crazy. Like, I've never experienced this anywhere near what it's like right now in crypto, especially at the earlier stage, at pre-seed stage. And maybe back in the day, a pre-seed investor would come in and give capital, but they're not right now. But it's not like seed investors are stepping in like Dragonfly, Series A investors, etc., because they want to, again, stay focused at PMF stage, put more money to work in things, and concentrate basically in things that matter. So this is creating a complete reshuffling and recycling of the entire sort of founder market, especially from investors. And what I'm also noticing, which you said, Mike, is these bigger funds, e.g. Paradigm, which for the second time announced they're going to also be looking at AI deals, even though they announced that in their last fund. And I think they only made 1 or 2 investments into the AI category from that. But I do suspect that this fund, they'll be making more investments in AI across the board, from pre-seed up to Series A and beyond. Even us, like, we are open to speaking to people outside of crypto. The question really is, like, what is the right to win? Do you have, like, can I walk up to an AI founder in SF tomorrow and be like, I'm Xavier, I work at Fractus, here's a bit of capital, would you take it? Because I suspect that they'd like to take it from the other Web2 VCs. Whereas, like, the Series A investors and beyond, the larger ones, they have a bigger right to win, no doubt. They've got obviously phenomenal brands, and I'm very jealous of those brands. But, like, they do have some right to win, but they're also competing with, like, Sequoia, some of these other big ones that are really, like, benchmark, etc. And I think that's where it's going to get very interesting to see if they can compete. So, like, it's a very new era, I think, for all crypto investors.
Yeah, that's interesting. I mean, I would say like on the you get too big to win, or like your success ends up being a problem, right? Like study Benchmark, super interesting.
Yeah.
They had an extremely successful like .com bubble, fund, tried to scale up, total failure, and have just stuck to their guns, saying like, 150 is our sweet spot, and we could raise as much as we want, but we're a premium product, and we're going to stay, like, we're not going to win on basically just management fees. So that is like my favorite fund because of that discipline and the consistency around it, for sure.
By the way, Myles, as well, just worth mentioning as well for listeners that, like, not only have they capped the fund size, but it came out in the last week or so that the returns have been like 5 to 10x on those 150 mil funds. So they have some of the best returns in Silicon Valley right now.
Don't get greedy. It's your bread and butter. Just stick to it and you're going to nail it. And then the second piece is, there are 2 like funds that I think are interesting examples to take a look at. The first one you mentioned is Paradigm, like returning to AI and robotics. Second one is Inversion Capital. So that's Santi's fund that is basically taking a stake, like a controlling stake in mid-market companies, and then call it like Web3ifying them. Right. And this points at 2 things that so far have been really hard for crypto companies to do. One is like actually, getting traction outside of the crypto bubble in AI, and we'll call it robotics down the road. Like that, I think, like Paradigm sees Tempo. They have a massive stake in Tempo. They see like agentic commerce and payments being a large part of Tempo's growth potential. What's the easiest way to make that happen? You do like the, Kleiner Perkins playbook. You just have a cabal, right? Or you invest in this company and you pair it with this other portco and you facilitate all of this, right? And then the other, big growth area that's been really tough to crack is like, hey, how about all the non-sexy existing companies out there in the world that are not thinking about anything related to like the bleeding edge of tech, even crypto, right? Or like thinking how, crypto could transform their business. But a smart person who looks at like a sleepy or like on the surface sleepy company can be like, yeah, that actually there's there's like, if you've been growing at, 5% or 10% per year, like if there's we could probably squeeze a lot of juice out of this company, if we were to like Web3ify it and then, see some massive growth, maybe do a big roll up strategy under it, sell it a lot. But like I've been trying to pitch those sleepy companies from like an L1 seat, and they're like, what are you talking about? Like maybe, like, yeah, but like we have a lot of other priorities here, right? Like our budget and roadmap has been set months ago. What's the way to do that? You just force the issue and you buy that company, and then you pair it with the tech that you want it to use, right? And that's been super cool. That's like almost forcing the Palantir, playbook on a company because you own the majority stake of it. And by the way, that's what Thrive Capital is doing. Probably like the hottest VC firm in the world right now with Thrive Holdings. They're just basically becoming like a holding company, and like taking big stakes in companies, and then they own 10 to 20% of OpenAI. Cool. All right, let's like take that company and make it AI native, because we can now that we own it and we see the potential and we figured that out ourselves. We don't need some internal champion to like buy into this idea. We'll just buy the company itself. So those are two things that point at like manufacturing distribution for your portcos as a value prop.
Yeah, I think that's also such an active way of manufacturing the distribution too. I mean, even like, which I totally think are super interesting and very cool, even just from like a pure brand perspective. So like, let's just look at what is working in crypto today. Like exchanges of some sort, right? If you're trying to build prediction markets, a new DEX, I mean, it's getting more and more crowded, more difficult to do that, but like that's what's kind of working, right? Like Hyperliquid, right? Exchange stuff. Stable coins and tokenization, RWAs. In every single one of those categories, imagine yourself, you're a new founder. Like, who do I need access to? Everyone that you need access to is outside of the space. That's where I think the most imminent threat to VCs in crypto is just fintech and VC, like fintech VCs. And
Bingo. That's why Ribbit has never been like more attractive as a VC right now for crypto companies.
Yeah, Ribbit is like the perfect example of this. I agree.
Just a quick one on that. So, I was actually just looking. So Ribbit did invest in like something like Osmosis back in the day, which of course is the Cosmos chain. Shout out to Sunny. But even back then, Ribbit was always a fund that was actually kind of pro crypto. So like nothing has kind of changed there. It might be leaning in a bit more, but I think fintech funds were always crypto curious. But now I'm curious. I don't know if you guys have seen it. Like, are you noticing more fintech funds are coming in? Because at least from my perspective, like it still feels like they're kind of watching and waiting to see where this market goes in the next year or so.
Yeah, I mean, I think the most active player right now at pre-seed is YC, right? Like, I think they're taking a ton of crypto deals on, and then I think outside of that, like, but you're right, like Xav, like NEA is a big one. What's the one? There's one that starts with a Q. Like, I don't think like they've. It's
like
more
Green Oaks,
but it's more crypto companies like vying for their sort of attention than the other way around. And that speaks to what like crypto teams I think are focused on. But maybe I'm wrong. Maybe I'm like, this is very finger in the air. Like,
no, I think it's just it's a branding thing, right? I mean, even the VC arms of asset managers like Apollo or Fidelity, right, have a lot of edge in winning deals. I think, Myles is laughing. Myles, I know you have that deep experience there. But they do. That's especially if you're you view your customer as institutions and large asset managers, you want some of them on your cap table. So anyway, all of this to say, I think, this is not us picking on, I'm sure that many of the crypto VCs that exist will be successful. Same with founders, right? That have been doing it for a long time. I also think it's fair to say that the game is changing, and typically when the game changes, not everyone figures out the new rules in time, right? And also, a lot of people just made a lot of money already. And I think that's a huge part of it. Whenever, you see someone leave that's high profile, like, oh my gosh, should I be questioning this? I mean, a lot of times just made a ton of money, and that's amazing. That's great. Like that's the cycle of, that's how it works.
I have a huge amount of respect for Coinbase Ventures, because I've loved their strategy from day one. It's always been 50% strategics, 50% like pure ROI plays.
Yeah.
And to the extent that your value prop, like on the strategic side, even if it starts as an ROI play, can transition into a strategic partnership, like what else would a startup want apart from what Coinbase as its main customer, unless Coinbase decides to compete with it later? But like, that's the sort of stuff where I'm talking about, where you can, I think like the players that are representative of the distribution that crypto teams want, they should be taking stakes, in these companies, because it would be very, very easy to get whoever they want or to get into the cap tables that they want, right? So PayPal Ventures has actually done a really great job. Not like bullish or bearish on PayPal necessarily. Seems like they might get acquired by Stripe, which would be kind of nuts.
Stripe. I mean,
Yeah, but there you go. Like, do you want to be in the Stripe, Thrive Capital, like Tempo, Paradigm, Cabal? Like, that sounds pretty good right now. You're going to get a lot of warm intros. And as long as you're not competing with one of their biggest positions, like, you're probably good. So yeah, the game has changed a lot.
the game has changed, and I think the question is, I think there will still be, Zave, in the space you play, like the very early stage, right? I kind of see that as kind of being a perpetual. There will always be opportunity there and edge for finding. It's just tough, just difficult to do. I think if I had to guess, like where the most pain is the early stage VCs that kind of made their money in that, investing in that stage, and now are too big, and now they have to figure out edge in later stage.
Or they can't compete as like somebody who, if you go to them for your seed or your A, like, you don't really think they have any like value add beyond that, right? Like, you'd rather raise that seed or the A from the big fund that can get you all of the big like enterprise contracts, and then put another 100 million into you for like your B or C, right? So yeah, I agree with that. And it's just about like, there's teams that will like, or there's funds that will be successful because of those, like, call it economies of scale, or like, and then there are teams that funds will be super successful by like staying small and knowing what they're good at and just sticking to their guns.
I think one thing that could get interesting, which I haven't given much thought to, but I definitely think could happen, is, again, I'm pretty sure it's Dragonfly. I could be wrong here, but there's that kind of fintechy company called Rain, which it sounds like one of those, or two of those major funds that are all over. If that's like a major success story, it's like a Deticorn, Dragonfly, and whoever else were there from Series A beyond, and they invest across rounds, they could actually have some major success stories, like the next, crypto ex fintech founder to come on board and pick their capital over like a Web2 fund that hasn't really done that with a crypto native company that tried extending out. So I do think like it's really on them actually at the moment, in terms of like they're probably hustling hard to find these companies which they can use to, establish brand credibility across the entire space, which they already have an amazing brand, obviously. But I think they can win the category even against fintech VCs long term if they have a few success stories. Like, I don't know right now. I'm putting this question to you guys. Like, I don't really know if there's been any teams in fintech x crypto that has gone like insane, maybe outside of Stripe and Tempo now because they've come to blockchain later. But like, any teams which chose not to pick someone like a tier one Series A investor in crypto and chose to pick like a tier one non-crypto investor, and they scaled with that investor and it ended up being an incredible product with a lot of PMF and high growth success story in crypto. Like, even something like Polymarket, like that was crypto native capital for a long time, and then the bigger players came on later, but like they were more like Series B beyond instead of like Series A beyond. So that could also happen where like crypto native capital ends up specializing at Series A and keeps following on, and then the bigger players come in, after that when it's more and more obvious. So
I mean, where would you rank like a Morpho being led by Ribbit there?
that's a good question.
Or even for Rain, like, I think they are the archetype of like who people are looking for now. But yeah, Dragonfly like led them, but they also had Mischief VC on their cap table, which is the head of product at Cash App, the founder of Plaid, right? I think these are the folks that like are most helpful at getting Rain into the rooms that they needed to become like, part of the Visa network, and then like expand on from there. Like, if you're trying to sell a white labeled stable coin to Klarna, wouldn't you rather have like Klarna's investor on your cap table than you would, the crypto native VC that helped like the last one get like success, or like, maybe they got success despite not having that help. I don't know. That's where I lean, but
I mean, even still, like I'm not in the inner dynamics of that round, but it's still interesting that Dragonfly could lead that because from what I understand, it is a very high growth, successful company, and they did choose Dragonfly's capital as a lead check, and that is meaningful at any later stage. So, yeah, to be curious to hear, I guess, why they chose that over other kinds of VCs to lead that round. And yeah, again, it's just such a new ball game for crypto VCs trying to put capital work in different industries, AI, robotics. Now they're competing with some trad funds. Do they try and specialize in a stage? Do they specialize in like a sector? Do they specialize in also that crypto intersection? I think all these are like up for debate. I'm super curious to see where they will land. And then also you have other funds like USV, for example, which we haven't even spoken about in this episode, which like I absolutely love as a
USV
fund.
is super interesting. Like just one devil's advocate on this in the same way that I did on the founder side. Like, is it possible that we are underweighting yes, knowing how to manage your Discord is useless, right? But kind of like there are some, I've just watched a lot of like very, most of the work that you do as a crypto native startup today is still very intensive, like audit, smart contract development. I mean, it's not like there's infinite talent in people that can do that. I mean,
I don't know. I would actually make the analogy back to the company like life cycle that I did at the beginning of the episode, where it's like if you're building something in a space that's like it's what you're building, like the thing is already working, right? Let's call it
yeah,
cross border for stable coins. Then you can probably just hire like the mercenary VC who is like knows how to repeat playbooks, has a bunch of warm intros that it can give you, and you just run with that. But maybe there's a difference between like the pioneer salesperson or the pioneer BD person that has to be able to really comfortable navigating through the unknown, right? And I think that's probably the thing that has persisted about VC's value add is like we've been, searching through open waters, like navigating, with the stars for like years and trying to find a path, right? And if you can find VCs that can help you do that rather than like pour gasoline on the fire of something that's already working, that does matter. And I do think that Rain probably raised back when their idea was not consensus working and popular. And like Dragonfly's value add there is just being there through those times of the unknown, right? And until you find product market fit. And now you just need money to throw gasoline on the fire, right? And network help. But that's probably it, right? It doesn't matter what the specifics are. It's just like we can help you think from first principles and navigate through all this because we've done it before.
All right, guys. I think we got to call it here, but this was a fun one, and yeah, hopefully thought provoking for new fun. I think the positive spin on this is, there's a lot of opportunity for new founders and new funds out there, in AI, right? Dave?
Hey, actually, no.
And I just remain very positive on the world here, and I think none of this was intended, by the way, as any sort of dig at anyone that's made it in crypto from the fund or the founder side. Like, unbelievable talent in the space, and I think it's just to just think about how things are changing. Is all. So
Awesome. I think we threw less shade on people than we thought we would with this episode. So I think that's good.
I think we did good. I think we did.
We'll get out with no hurt feelings.
All right, perfect, guys. This was a ton of fun. See you next week.
See you guys.